Hello, YouTubers and subscribers. It is CoinPicker.us. After somewhat of a vacation trip around the world, I will talk all about that. But I wanted to create a presentation today to catch everybody up on what has happened based on some of my predictions and what is likely to happen going forward. Fortunately, everything is pretty well playing out as I said, so allowing us all to profit. What we're going to talk about are what we got right and areas that may not have come to fruition yet, but will throughout the upcoming year, and ultimately how you can make the biggest profit. So stay tuned. I would like to make this a 2-hour mega broadcast. However, I've got to run out for a meeting. So I'm going to be very brief and then come back again relatively quickly, especially for subscribers, to go over virtually everything that I talked about last year that came through and whatever areas may not have come through, whatever investing ideas. But just to hit it really quickly, I had said many months ago that the single best thing you could do was to short the FANG stocks with long-dated options, and then stuck my neck out big time. A long-dated option is 3 to 4 months. A lot of option players will stay in the 6-week range or lower, go very, very tight with their options, maybe 2-3 weeks. I think that's utterly ridiculous. You have to not only be right in the direction, but you have to be right in the timing. More of a challenge than most traders are capable of. However, if you can be right in the direction and you have a bit of a variation window in your timing, 3 to 4 months, I consider to be super easy to nail it. I demonstrated it by calling that twice. I said, load up short on Facebook, Apple, Netflix, Google, the FANGs, essentially. I said, load up on the highest ones. Facebook was the one that I picked as the most egregious at one point, and Netflix at another point. So both of those had some serious downside. And both of them came true in flying colors. If you had gone in with any reasonable option dated 3 to 4 months short, you probably double, tripled your money without a problem. And then I said, once that passed, I said, do it again. Close out those options. You've gotten a good profit. Close them out. Don't be greedy and don't hold on too long because you're going to lose your time value. So close out those options and reload up again on an up day, which is what we did get an up day. Reload up. If you reloaded again, you again doubled or tripled your money. So you did very well. Now, the bonds, 10-year bonds, and I don't trade bonds. I don't recommend anybody trading bonds. I don't think any of you trade bonds. But bonds are indicative of what the market is thinking. Bonds bounced to a lower yield, but I predict, along with the dollar, I predict that will not hold. I had said in one of my videos, if I had somebody going through them, I would actually, you know what, it wasn't even a video, it was in one of my updates that I emailed out. And what I said was the dollar is likely, it has a potential spike after the election when basically we don't wind up in a civil war or something like that. Do not fall for that spike. I specifically said that. Do not fall for that spike. Well, it absolutely did spike. I think I pulled it up here. If we take a look at what happened, so we we get our election, we get spike, and now we're back down. So this is exactly what I had said would happen. That's exactly what happened. We're back down. It just happened today, but I knew it was coming. It wasn't hard to see. And the window was fairly short. We got a fairly quick pop. We popped up a few times, but ultimately the trend started down fairly quickly. Why is that important? Well, the dollar dictates prices across everything. Let's take a look at what I'm talking about. And I haven't even checked today. Okay, gold and silver popped up significantly today. Gold is just on the cusp of breaking out to 1,300. Silver has been taken to the woodshed and is much lower, but nonetheless recovering. And both of them with a less emphasis on silver. I typically like silver better, but less emphasis, and I'll tell you why. And most people don't talk about it, and especially the silver community. There is a monster potential overhead short or a dump available by JP Morgan in the silver market. That's one of the reasons why it's being held at such a low amount, because big money or even small money who knows what they're doing will realize that JP Morgan could crush the price of silver at any moment. The same cannot be said of gold at all. So there's something else. There's another message here. When gold is rising and silver is not rising, what you have is a signal that says we have monetary instability and weakness with industrial instability and weakness. That's precisely what we have. Oh, but I might hear somebody say, we had such blowout job numbers. The job numbers are fantastic. A, don't believe the job numbers. B, the job numbers indicate that the market is not absorbing newer workers. It's hiring older workers. I strongly, and that may well have been for holiday sales, I strongly suspect that the job numbers will not continue onward, because all indications are that the on-the-feet economy, the one that we experience on a daily basis, not the financial manipulated economy, on-the-feet economy has some struggles ahead. Now, I'm not going to talk about a collapse or anything like that, because I don't even think it's relevant. Ultimately, if your economy, your personal business is doing well, that's all that matters. That is all that matters. You can help others if you wish, period. The outside economy, the numbers that everybody talks about, the job numbers, irrelevant to whether or not you are making a lot of money. But I just wanted to show you that the driver of it all, the dollar, has completely followed through with what I had said would happen. And that was very, very important. Now, bonds, on the other hand, in fact, I better check that. Let's look at the 10-year bond. Oh, why is it not? Oh, there it is. Okay. The bonds peaked somewhere in the 3.2 range, I think, in terms of yield, and now it's down to 2.6. That is not going to hold, in my book. Yeah, let me see where it did peak. No, well, this is showing, this is only showing, let's see if we did a month. Probably show, okay, yeah, it's just over the hip of 3. Now it's dropping. I do not see it dropping for long. I think ultimately this trend that we see in play here is going to continue, and the next spike up eventually will be significantly over 3. One of the things that's happening is you're getting dramatic moves in bond prices. That is a waterfall collapse, and very rare in bond. Well, rare. It's not a typical scenario in bonds. Bonds tend to move much slower, but we're gonna see that change. And what does that mean? Well, it means that the United States is being questioned more. Precious metals have moved up off of the base, as I thought, but here's the deal on precious metals. Here's the deal, and this is it all relates to crypto, by the way. If the precious metals do not make significant headway by mid-February, maybe March, and when I say significant headway, gold probably needs to be up $75, crossover $13.50. Silver probably needs to cross over $16.50 or higher. Then after that period of time, the likelihood is trending to lower. I don't see that. I see both of them making sufficient headway. I see 2019 being a very profitable year for anybody holding gold and silver, and especially the stocks, which I will be highlighting for subscribers. I will be highlighting some of my favorite stocks and the ones that I'm investing in. And also, I'll tell you what I do in stocks. I go for the absolute lowest price stock possible, take a reasonably sized position, and wait for the higher quality stocks to move first, and they will eventually drag up the lower quality stocks. I don't generally invest in expensive precious metal stocks. There are a couple of reasons for that, other than ones that pay dividends. If they pay a dividend, I'm willing to go in for a bigger, higher cost stock. But I like the lower cost ones that are 20, 30, 50 cents, $1, $2, $3. Why is that? Or even 5 cents, 3 cents. Why is that? Well, because when the market lifts off, the whole market lifts off. That's what happens. And in a 10-cent stock, it takes no money to bump it up to 20 cents. Bam, I've got a double. In a $50 stock, it takes a lot of money to get it to $100. A lot of money. So that's why that is. Now, that principle has made me some of my biggest gains ever, and they come really quickly. So that's what I will be showing for subscribers, and I'll be talking a little bit about it here. Now, cryptos, as I said before, only accurate, specific, tight time frames, not broad-based. That's precisely what's happened. I haven't even looked at the crypto space in a while. Let's see if we have crypto here. Yes, all cryptocurrencies. It's just been, it bounced down to 3,000. It went up. It's went up to 42, 44. It's probably down to 38-ish. 39. So it's hanging in there. Now, what you'll notice that you're getting a bit of a pop at the same time you're getting gold a bit of a pop. And the reason is that around the world, people are beginning to rely on crypto. Venezuela is absolutely a case. They're relying on Dash, Bitcoin, anything but their own currency. And that Venezuela Petro is a total joke. But around the world, people are realizing that crypto can serve as an escape valve. It isn't fully functioning yet, and the banks are doing everything they possibly can to squash it as a safety valve. But in China and other places, crypto is a means of, and especially in Latin America, is a means of some level of security and an easy way to move without the banks. And you're seeing some increased volumes, and we're at 4,000. I think with Bakkt and a bunch of other more mainstream crypto services coming on, we can see crypto lifting off again. That's my expectation. We also have some more great projects. I will talk to you about that in the near future. Agricultural funds, even more positive than I've said before. I haven't checked the commodities recently because, as I said, I've been traveling. Let's check the commodities. All right, so I know that there was a little bit of a dip in some of the commodities. Yeah, but 0.53. Copper is suffering. Copper is suffering because the industrial economy has been suffering, and also Chinese investors began using copper as a means of substantiating bank loans. So they were buying a ton of copper that was never being used industrially. It sent a bunch of false signals. U.S. wheat is down just slightly, and this is not really a good report on commodities. I need much more information. But you can see that you have more green than red. You have more green than red, and especially in the softs. I think there's just virtually no end in sight for the soft commodities and the soft commodity funds to rise and make a lot of money. And I'm going to look for, and I know there are analogies you can invest in the crypto space that track the agricultural commodities. Now, high dividend investments in energy will perform. They are not performing now, but they will perform. They will be very significant dividend-paying investments. Now, why do I say that? Because oil has been rising significantly off of basically a collapsed base, and that's what I see continuing. I see eventually oil, especially as the war drums beat louder and louder between the U.S. and China, U.S. and Iran, all over the place. The war drums send oil through the roof. So I see, even though the United States is now an oil exporter and one of the bigger ones, I still say that the fracturing of the oil market and the demand for oil reserves because of the potential for war, I think oil has and also ultimately oil is not being replaced. The largest oil fields in the world are not, well, the ones that are developed, let's put it that way, are not being replaced, and that's Saudi Arabia. So that's why Saudi Arabia is attacking Yemen, because they're trying to get their oil. But that's getting a little too much detail. All right, so that's where we're at right now. Okay, I also talked about Fed continues raising rates, housing markets. Housing will crash, has crashed. Markets will crash, absolutely crashed. Dollar holds briefly, it held briefly. Commodities still rise, though slower. All of that has happened. And then the dollar, it held briefly, which indicates that it's dropping it. And this is the shocking thing. This is the one where I went very counter trend from everybody. Everybody was saying, load up on dollars. The Fed is raising rates. The dollar is going to rocket higher because of the Fed raising rates. Now, and some said, some other Peter Schiff has once said, well, the Fed can't continue raising rates. It's going to have to turn around, or probably will turn around in December, or it might turn around. Well, I strongly came out and said, no, he's flat cold wrong. The Federal Reserve is going to continue raising rates. Now, they may slow down only to the extent that they feel threatened for their monopoly on controlling our money supply. And they are indeed threatened, I could assure you. It's one reason why Trump has so many daggers pointing at him. Whether you like him or hate him, he's on the right track with threatening the Fed. He was wrong in saying that the Fed should stop raising rates and let the money flow. That's just pandering to the history of stupidity and corruption. So ultimately, I'm not pro-Trump. I'm pro-freedom. And whoever represents freedom, I'm pro them. So moving on, though, this is super critical. The Fed has not reversed course, but has said that it will hold, then potentially lower. That will suspend the markets for a little while. Commodities will rocket. Dollar will fall hard. Metals will rise significantly. That eventually can happen. I also said Dems and socialists take midterms, which they did. They took a ton of real estate in the House of Representatives. They didn't take that much in the Senate, although the people that are in the Senate that are claiming to be Republicans are largely not. And I'm not pro-Republican. I'm pro-freedom, as I say. But ultimately, the Dems had a fairly strong showing, even though it was basically all off of corruption in one form or another. It was all cheating, all corruption, what went on in Florida, what went on in Texas, what went on in Georgia, all corruption, end to end. The Democrats are, the socialists and the communists are willing to do whatever they want to take power. Whatever is illegal, it doesn't matter. And they'll rub it in your face. The markets have continued falling. The dollar has started to fall to show it. The PMs have risen, and the bonds have not crashed, but they will, in my opinion. Now, one aspect of the bonds not crashing is that the bond market has been the Federal Reserve, the Treasury selling on one end and the Federal Reserve buying on the other end. That's what the bond market is. So they can control the yield on the bond market. This false belief that the bond market is a real market, like there are people out there, independent investors, small investors, hedge funds, buying up the quantity of treasuries available from the United States because we are running such a deficit, is a complete fabrication. So the Federal Reserve and the big bank partners can manipulate that bond yield. Ultimately, though, the bonds are headed, in my opinion, lower, which means that the yields will rise, will continue to rise. All of this makes everything much more expensive for us in the United States. So where does that leave? Where does that leave us? Here's where it is right now. The Fed may hold or continue raising. Housing is going to be weak going forward. The markets are weak going forward. I don't care about the relatively fake labor reports and things like that. I look at hard numbers, including energy consumption, etc. I think that, and I'm not even talking about market crashes. I don't really care about a crash or that kind of thing, other than in the crypto space when I knew we went parabolic up. I knew we were going to go parabolic down. I'm just looking for the trend. Is it going to go up or is it going to go down? If it's going to go up, what's the time frame? So I buy my options within that time frame, expecting a price rise or a price fall. That's the extent that I run my analysis because it's all I need. It's all I need. I don't want to add more work to it. Now, my expectation is that the markets are still expensive and the earnings are rapidly decreasing. So their reported earnings, just like Apple, where Apple gets crushed because of the China slowdown, that's going to propagate throughout the entire market. So the market has a downward bias, strong downward bias. You can buy, again, short options if you wish, long dated. But you have to, at this point, because there's been a lot of damage, you have to be much more careful because there could be a spike higher prior to the downward trend. But we have a downward trend still in place. We've reversed course to a bear market. I see that continuing for quite a long time. And there are ways to play that. Now, crypto, we have bounced hard off of the lower bound. And I see that representing the potential upward trend for crypto. The volume is something I'm tracking. Now, I've got a new indicator that I will be presenting that shows a very sophisticated method of detecting when crypto has a legitimate liftoff happening. And I'm going to be, as soon as I get that added into the subscriber base, I will reveal it every now and then to non-subscribers, but subscribers will have access to it as soon as we update it. And it's a great trading tool. You can definitely pick up. I wouldn't say you could pick up massive moves with it, but you can pick up 5, 10%, 20% moves with it, and that adds up very, very quickly. So that's what's coming. And also a written update is coming soon, and another update to the website. I have added a resource that is super powerful to the website for all subscribers. So I hope everyone's having a great year. The next update I'm going to do, which I plan to do this week, is going to be a long update on what to expect for 2019 into 2020. Just FYI, 2018 is going to get what was happening towards the end of 2018 is going to get much more aggressive and much more obvious and powerful in 2019, but with significantly more conflicts that impact the markets and how to invest. So already run long, but thank you for watching. Please subscribe if you have not. Go to coinpicker.us if you want to sign up for the free email newsletter. And I will get back with everybody with a big year in preview update, hopefully this week. Thank you.